Let's give you the markets update now, and local trade may get a reprieve today from the slight downward trajectory of the rand. The JSE ended firmer, and the rand, on the other hand, touching its weakest level in 2 weeks. Well, let's speak now to the head of equity research at FNB Wealth and Investments, Chantal Marx, joining us for a quick update. Chantal, good morning to you. So let's kick off with the quick overview of how the local index opened this morning ahead of that all-important second quarter GDP figures.
The index, unfortunately, has opened lower, but that is in line with what we've seen in global markets. And it really is a response to a weak services data points coming through from China. There is particular concern over the health of the Chinese economy after a really slow reopening post-COVID-19. And there's been interventions by authorities on the matter, but this new weak print has really put a damper on overall sentiment.
Let's talk commodities. Oil prices mostly flat today. The market digesting expectations of an extension in supply cuts by the leading oil cartel, that's OPEC+. And the members there, Saudi Arabia and Russia, help us make sense of what's going on here and whether it's linked to our fuel price hike that we are seeing.
So with oil, it's always about demand and supply dynamics. And what we're seeing at the moment in oil prices is that big producers are cutting production in order to push the price higher, because demand has been a little bit weak, particularly coming through from a weaker than expected Chinese reopening. So as those dynamics continue to play out, the oil price is quite volatile, but it's on an upward trajectory because of those supply cuts. And this directly relates to what we are seeing in South African fuel prices at the moment. Higher oil prices and, of course, a weaker rand in South Africa is pushing through is resulting in us having to push through these big fuel price hikes. So as long as the oil price remains quite elevated and the rand remains quite weak, we'll probably continue to see an increase in petrol prices, particularly if it weakens further or the oil price increases more.
Well, let's talk about Stats SA, which is due to publish those GDP figures of the second quarter. The first quarter, Chantal, South Africa's economy rose by 0.4% quarter on quarter. Do you anticipate growth to be stronger than in the first quarter, or do you actually expect the inverse?
So the consensus number is for growth to slow but to remain positive on a quarter-on-quarter basis. But we are expecting a really nice acceleration on a year-on-year basis, which is usually the print that we'll look at, or that the market will look at quite closely, because that gives us a sense of where we are now relative to where we were a year ago. We expect that improvement to be driven by a better outcome for miners and manufacturers. If we just look at the high-frequency data like mining production and manufacturing production, that have all come in stronger than expected, despite load shedding and other constraints like our railway system not operating at full capacity. On the flip side, though, the consumer seems to be under increased pressure because of higher interest rates. So we've seen retail sales numbers come off. And then there are the mystery elements. Agriculture could really throw a spanner in the works. A really strong showing from the agriculture sector because of really good harvests and high commodity prices could really help lift our GDP. And then, of course, the finance and real estate sector that we also don't have high frequency data for. So I think it's going to be a very interesting print, and we'll be particularly interested in the areas where we don't have up-to-date information.
Well, we'll need to stick around until 11, and I think that's when those numbers are going to be published. Let's conclude, Chantal, with Naspers, which owns South Africa's largest e-commerce platform. It's warning that new competition watchdog regulations could give an edge to the global giants like Amazon over the local e-commerce firms in a growing retail sector, might I add. Help us make sense of these sentiments. What exactly are they latching onto here?
This emanates from a Competition Commission inquiry into the way that Naspers does business and retailers, online retailers generally. And what Takealot specifically does is it has its own products that it sells, and then it also sells products from third-party retailers. Now, the way that the Competition Commission wants them to continue going forward is that they are not allowed to promote their products above anyone else's products, and that are also sold on the platform. And they are also not allowed to tell these third-party suppliers that they cannot charge lower prices for their products on their own websites. Now, Naspers is saying that when Amazon enters the market, they have a very similar business model to Takealot. They will not have to adhere to these specific parameters that are set up by the competition authorities in South Africa, because they are not a South African company. So what they're saying is that they're being unfairly penalized within the broader competitive landscape for being a kind of a homegrown South African business.
Chantal Marx, let me thank you very much for that markets update. She is Head of Equity Research at FNB Wealth and Investments.